How did movement even come about?
So like in 2008, whenever the housing market was crashing, Casey Crawford and Toby Harris. Casey Crawford is a Super Bowl winner. He's a NFL football player. So he had won the Super Bowl, had a bunch of money from that, and he didn't want to kind of throw it away like everyone else typically does.
Yeah.
He wanted to invest it in something good and kind of change up the game on home lending. So him and Toby Harris decided to start their own lending company. And they really wanted to structure it to bring back the love and value to people and not be a predatory bank. So they created the 671 process where we're doing the 6-hour upfront underwriting and then 7-day processing, 1-day close.
Brought to you today. No, I'm just kidding. Movement Mortgage. Thanks for coffee, Bree.
Anytime.
Thanks for joining us. Just being here today is exciting. I'm going to talk to you with one of my preferred lenders. This is Bree with Movement Mortgage. I met her at the Moore Chamber actual leadership Moore graduation luncheon. It's a mouthful.
Yep.
And we were two people that just didn't know where to sit, and they set us next to each other, and it worked out well because we were in the same industry and just a good person to be around. So we connected well. One of the things that she does and focuses on and has a big passion for are VA buyers. And so veterans and those that have the option to get VA loans. And we're going to deep dive a little bit into that today because there's a lot of myths in the industry about VA loans. There's a lot of kind of unknowns or questionable things that you might have questions about. And I think she's going to clear up a lot of things for you today. So, yeah. Bree, welcome to the podcast.
Thanks for having me.
Of course.
And thanks for that beautiful introduction.
I appreciate that. That was on a whim, winging it. Anyway, so talk to me about your experience with VA buyers. Like, how long have you been doing this? Tell me a little bit about your history. Tell them about your history, because I think that matters, right? Working with an experienced lender is obviously something that I preach, and so you're one of those people. So talk to them about your experience, I guess.
So I've been in the industry about 4 years now. I've helped a lot of veteran families get into homeownership and even stacked like other down payment assistance programs to help it alleviate a lot of the expenses on their end. A lot of the stigma around VA loans is that they're a lot harder to qualify for or have a lot of hurdles to jump through. And that's truly not the case.
Love it. I love it. So hurdles are something we're kind of built for, I feel like.
Oh, yeah.
Throughout the 30 to 45 day transaction, sometimes 60-day transaction, that's kind of point A to point B. There's hurdles all the way through it. Mm-hmm. I don't personally think that there's more hurdles with VA, but I think there's a stigma to people thinking that there are more. So talk to me about from an appraisal standpoint, because that's usually when we're talking about strength of loans. I'm talking to my sellers and I'm saying, hey, look, if it's cash and it's any type of loan, cash is king, right?
Yes.
And so usually that's the easiest way. They can close the fastest. They can do all that. Then you just got all these financing options, right? And you kind of weigh those based off of what their offer merits. But if they're all the exact same, then you get to which loan is stronger and why. I was reading a statistic preparing for this, and it said that VA buyers have the least amount of foreclosures compared to any other thing. So to me, that seems like they're the strongest set of buyers. But differentiate a little bit from an appraisal standpoint of what we're looking at whenever you're talking about a VA appraiser going out versus an FHA appraiser.
They're very similar. They're both government loans, so they're going to be looked at the same from an appraisal standpoint. The only real big difference that you normally see on VA appraisers is they'll have repairs for like maybe handrails if porches are too high or decks are too high. But it's really nothing different than a normal FHA appraisal.
So FHA, you're dealing with like, I don't remember what they call it, M&Ps or something like that.
MPRs.
That thing. Mm-hmm. And that's essentially keeping the house safe, secure, and sanitary.
Yes.
And so that's chipped or peeling paint. You can't have like missing flooring. You can't have broken windows. You can't have stuff like that. That's on every government-backed loan.
Yes.
So usually my thought process goes to like conventional buyers typically have higher credit scores.
Mm-hmm.
Unless if they're VA qualified, right? Then there's just so many benefits to having a VA loan, they're gonna go VA rather than conventional. Is that correct, or?
Yes. Well, so on the VA loan, it's a beneficial over conventional because you're not going to have mortgage insurance at all on
Ever.
the conventional loan.
So mortgage insurance would be on conventional if you don't put 20% down.
Yes.
You pay 10%, that means you've got PMI, so an extra piece to your payment every single month until you get down to 80%, right?
Yep.
Or 78%, depending upon if
Yeah.
you're proactive about it or not. So to dive deeper into that, FHA, you're gonna have PMI for the life of the loan, and I think there's one caveat on that.
Unless you're putting 10% down, and then it's only for 11 years.
Okay, so if you're putting 10% or more down on an FHA style loan, you have it for 11 years at the start of the loan from then?
Mm-hmm.
Okay, so it doesn't matter if you ever get down to a certain percentage, it's just 11 years.
Yeah.
Why would you do that?
It's just not in some people's financial situation. Like if their credit score is a lot lower,
Okay,
that's why you would go.
but they've got
FHA.
money.
Mm-hmm.
Cool.
Over conventional.
Okay,
Because they're going to be hit hard on PMI on conventional loan if their credit score is a lot lower, even at the 10% amount.
okay.
So,
What does the difference look like from that perspective? And I know this is all a very situational thing for each buyer, but PMI in that scenario for an FHA buyer versus PMI on a conventional buyer for the same thing, 10% down, low credit score. What is the difference on that? Like $100 a month or like significant, like big time?
it could be a lot, like anywhere from 100 or more, just
And then
depending on how
the
much.
rate's not much better, right?
Mm-mm.
So why? So it just is because you wanted a conventional?
Yeah, long run benefit for the buyer. Like what I normally do when I talk to someone and weigh their options, especially when they have a significant down payment, is ask what their long-term goals are, because that will help determine which loan product is best for them as well. So they're making the most financial decision that they can.
Sure. Yeah, that makes sense. Okay, so back to VA and strength of that.
Sorry,
Actually, I skipped over the conventional appraisal. So my thought process there is that less risk, so the appraiser's not having to be as picky.
Yeah.
And then it's not a government-backed loan, so there's not like all of these like fine lines that they have to verify for the bank, correct?
Yeah.
Okay. So usually a conventional is a little bit less. Now I've had conventional loans where they're exceptionally picky as well, and sometimes that's just dealing with appraisers. We love appraisers. And
I mean, we can't close the deal without them, so we do love them.
We can't. You're right. No, they're great. It's just sometimes they're another hurdle that we have to get through. But okay, so
do your loans usually take 60 days for your VA clients?
no, I'm just this current one. The scenario needed to take 60 days.
Yeah.
So it was actually fun. So I love it when it works out like this. Hosted my first open house for my listing. Listed it the weekend after we did the open house, and we had really good traffic, which is kind of an unknown in today's world.
Have you been seeing more traffic?
I feel like
houses?
since the new year hit, we've seen more traffic. But for a while, for like the last quarter of last year, I felt like depending upon the day, the weather, depending upon the timing of when you did your, like all of that mattered. And then on top of that, you still had to go out and blast like 1 million signs and hope that people would show up.
Yep.
I had 7, so to this specific open house, I had 7 families show up. I was stoked. That's to me a great 2 hours,
Successful.
right? And so like that means I had 7 families that were potentially interested in this house for whatever reason, came through, which is exposure, and my sellers are happy, right? So, but one of those couples came through, we started chatting, they loved the house, they just didn't feel like they could make it happen for like 6 months. And I was like, what do you mean? He was like, well, I would be VA, I'd be a VA buyer, and I've got some things in my history that I'm having to clear up, and there's a certain time frame that's going to clear up. And I was like, okay, well, I don't need to know all your details, but like, when's that time frame? And he
Mhm.
was like, well, it's the end of January. It's like, okay. So, and this was end of November whenever I had listed it. And I was like, well, like a lender can lock your rate for typically up to like 60 days. So if you offered, you could offer it in line with when you would be approved under the assumption that you could get approved with your loan and all these things. And he was like, I didn't think about that. I didn't know I could push it out so far.
You can even go up to 365.
Really? You can push it out for, wow.
Yeah. So I used
That's
to
awesome.
work with a lot of like builders.
Mm-hmm.
So you can do what's called like an upfront lock. So you can pay a fee. It's usually about like 1%
Okay.
upfront, and you can lock in an interest rate for 365 days. And then you get a float down option too, about 30 days out from when you close.
They check to see if it's any less, and if it is, they'll float it down to that specific rate.
Yep.
That's pretty awesome.
Yep.
What does that fee look like?
It's about 1% of
1%
whatever the
of the
purchase
price of it. Okay.
or the loan amount.
Okay. So I have another lender that has like a one-time close. Is that a similar type of thing, or are you still closing twice on a construction loan like that?
So it's if you're with like a more traditional neighborhood builder,
Mm-hmm.
you wouldn't have the construction loan.
Gotcha.
Sorry.
I love that.
That's my alarm when I normally wake up.
There you go. See, we're doing good, guys. Saturday morning. Let's go. That's amazing.
And I never turn them off. What was the question again? Sorry.
We were talking about. Sorry, that distracted me too.
The upfront fee. When you're doing a build like that on a new build home, it's not you're not holding the construction loan, so you wouldn't need to do a 2-time close or 1-time close.
Yeah.
The
Gotcha.
construction loan is held with the builder, so you would only need to qualify for the permanent mortgage loan at the time the home is ready.
Got it. Okay. That's the difference between building a custom home on your land and building a house with a builder that has the land already, and they're building one of their style of houses or customizing one of those to what you're wanting.
Yep.
Different strategies for every scenario. That's why it's important to have somebody that knows what they're talking about through those scenarios so they can guide you in the right direction. So going back to your question about the 60-day thing, that worked out really well, and come to find out they had a realtor. Great, like would love to work with them, right? Have your realtor call me and I'll tell her about all of this because she didn't have a clue what it was. And so she was like, what do you mean? I was like, send me an offer with what they're wanting to offer and put it on a closing date that's acceptable for when his stuff is going to clear up, so that way they can get the loan. And let's just start the process. Like my sellers are happy to wait this long to be able to sell it. You're giving us what we want. Like everybody's happy.
I'm curious if he was pre-approved before and had things that he was, or if he was like personally wanting to clear things up. Because I've had a lot of people recently reach out that thought they had things on their credit that they needed to clear up, but like medical collections, we don't have to look at those anymore.
Not anymore, right?
Nope.
When did that change? That was recent.
Yeah, it was back like 22 or 21.
Okay, that's awesome. Medical collections. That's a good thing.
Yep.
I don't remember the specific details, but I think it was like a certain time frame. It wasn't like once you get to this level, you're good. I think it was you've got 7 years or you've got 2 years until this date before we're able to qualify you. And I wasn't working with them, so I didn't dig deeper. But like, anyway, long and short of it, they did send us a 60-day offer, and I talked to my sellers. We got literally everybody was happy with it. It was at that list price that we had asked for, and I got news yesterday. The appraisal came in at value with no repairs. I was so happy. So that one took a little bit longer than what I expected, but it was just the timing of everybody's needs. And we're still not closed. That one closes on the 14th, so it was a long one. But typical closing for VAs are 30 to 45 days, right? And then you can even I know you can do them faster.
Yeah.
I know you're good at what you do. So like, talk to me about typical is a little bit longer because the appraisers are in a more limited bucket than what other appraisers are. And there's a couple extra steps that have to happen. Get with a good lender and that doesn't matter. She could close you faster than that. So I'm not saying that it is longer, but if I'm receiving an offer from somebody, I need to be of the mindset that it's probably going to be a 30 to 45 day, unless if they're like a VA specialist like you.
Yeah. So typically what I say too, because I've even had first time homebuyers, veterans that like reach out to me. Like I just closed one recently, and he wrote in his contract 60 days, and I'm like, is there a reason like you wanted to close in 60 days? Like, are you living on base and like your lease is up in 60 days?
Sure.
Like what kind of things are we working with here? And he was like, no, I just thought that's how long they took. And I was like, no. Do you want to get closed by the beginning of the year? Because I can make that happen for you. And that was 3 weeks. So we got him done that fast.
3 weeks.
Mm-hmm.
That's probably the fastest I've ever heard a VA deal done. That's pretty awesome.
Yeah.
Good stuff. Okay, so there you have it. Myth busted. It's not a 60-day closing unless if you need it to be, and it could even be a 365-day closing. But if you want it to be quick, you've got a lender here that knows the ins and outs of VA, and she can make it happen. Not always, but I'm not going to guarantee this, but like 21 days, that's a record for me, so that's pretty impressive. We've kind of already talked about strength of buyers through loan aspects, but I guess another myth is that because they're putting zero down that they're a weak buyer. Obviously not the case, but that's a myth, right? And people think because 0% down, to me, that's just like a major benefit that they deserve.
Yep.
But I mean, we've already kind of said that the foreclosed homes are way less likely on VA buyers. Typically they've got pretty set income, right? Because they're most of the time military or whatever, and they're. Talk to me about that. Talk to me about strength of the buyer per se, and why that doesn't really matter.
So the strength of the buyer on the VA loans is really what draws this whole program in. They get the benefit of the 100% financing that they can serve 90 active duty days and receive. That makes them eligible for the VA entitlement. The credit requirements are lower on the VA loan. We go to 580. And then a lot of military personnel, they get their base pay, their BAH, their BAS. We can include all of those as qualifying income.
Wow. Okay, so a 580 credit score is pretty low. So practically anybody that's got their crap together can get a house. I mean, that's amazing. And 100% is also amazing. And so I know you can't just walk into a house for $0 unless if you've got a really good lender and a really good realtor to negotiate for you.
Yep.
Talk about some of the fees that VA buyers will see and what we would need to do if somebody's looking to buy their first house or whatever they're trying to do. I know some VA buyers can get 2 houses with their VA benefits, and so we'll dig deeper into that. But talk to me about some of the like funding fees and some of those things that we need to expect, and then how to maybe bypass those.
Okay, so every VA loan does come with a funding fee. Every typical government loan has a funding fee. With VA loans, the minimum, if you do a traditional purchase, it's about 2.15% of the total loan amount. If you are receiving at least 10% disability, you get that funding fee completely waived.
That's huge. Do people are lenders asking that question?
Yes.
So they should be, right? And if they're not, like, have you heard of scenarios where lenders are not asking, hey, what percentage of disability do you have to be able to try to get that waived? Or is that like a credit that they get if they end up paying it? Like, how does that work?
No. So it's always, every veteran that is eligible for the VA loan will have a certificate of eligibility. And I've heard some people say that they need to go get it before. That's not the case. They can always just come to the lender. We can pull that for them.
Okay.
But on every certificate of eligibility, not only does it tell us their entitlement and if they have any loans out there on their entitlement already, it also tells us if they're getting a disability payment, and then it'll tell us the dollar amount too. So that helps us put that income in for qualifying income as well, but that will tell us straight from the beginning that they are waived that funding fee.
We'll get that or not. Okay, cool. So, I mean, that's a big fee.
Yeah.
And to get that waived is massive. So if you have any type of disability, it sure makes sense to ask that question of, hey, look, or raise that flag of, I've got this amount of disability, I shouldn't have that fee. And that's I mean, 2.4% on a $200,000 house.
2.15.
2.15. I mean, that's $4,200 pretty quickly that you could save right there just by having that. And so massive benefit. 0% down. Sometimes you can get that fee waived. Are there any other fees or things that we would have to worry about that are associated with VA over the conventional loans, conventional FHA or any of those style loans?
No, not typically. So VA loans, I mean, that's another added benefit for them. They kind of help regulate fees that they're charged. They do have additional inspections, like termite inspection is always required on every single VA loan. But that's usually the only thing. I mean, if they have well, I mean, obviously they want to test it to make sure there's safe drinking water, so those are required too. But other than that, like, you're not going to run into any extra additional fees for having the VA loan.
That's awesome. So well and septic, usually they have to try to have the septic perk or make sure that it's, you know, working properly. All the mechanicals, the main mechanicals. I know for like FHA and typically VA, they're looking at the roof as well. So like those big ticket items, they're wanting to make sure are good. But here's the deal, like if your house is in decent condition, like if you're living in it and you're taking care of it, like a VA loan there's no issues. There's really no issues. Like they're not so picky or there's not anything. And to caveat off of that, like if you don't have Lightning McQueen over here doing the loan, you could you could easily take a little bit longer and say, hey, look, I don't need the 21-day close. I'd like a 45-day close, because I know a lot of my clients right now have a house and then they're going out and trying to find another house. And so this gives us a little bit more time to not stress out, to pack, to do the things that we need to do to be able to get to the next house. And so these could be advantageous as well to be able to say, hey, look, we're going to give it a little bit more time and do that, which you can do with the other style loans, but it's just more common, I think, for VA to kind of be in that 30 to 45 day.
Well, they're usually too, like, I've had a lot of VA buyers that they'll make plans to buy a home and then they'll PCS shortly after buying that.
Yep.
Which is completely allowed, and then you can buy another VA home wherever you're PCSing to. And a lot of people don't think that they have entitlement enough to do that, because on the COE initially when you get it, it just says $36,000. But you can actually have bonus entitlement and go above that $36,000 guaranteed amount.
Okay. So let's talk about when that happens and how they qualify. That's dependent upon what, typically?
It's usually about how much entitlement is charged to that loan.
Okay.
So whatever the loan amount is, 25% is what's charged to their entitlement, and they have, I believe it's like $201,000 and some change of what they can charge to their entitlement. So that's like an $806,000 loan amount that they can go up to with 100% financing. So after that,
that's massive.
They can still get a VA loan, but they have to put money down.
So the people that bought my house were VA buyers. My personal house, the last one that we just sold, lived right up the road. And it was such a massive benefit for them because they were able to not have to sell their house, buy our house, so it wasn't contingent, praise God. And so they bought our house and then moved out, and it was peaceful for them, easy move, and then I stepped in and sold their house.
Well, yeah, and that'll
Life was good.
Give them time to get ready for that.
So the stressful part for them was like, Logan, if you don't perform, I've got a couple house payments, right? So that's a little bit stressful, but like, I can perform.
Yeah. Well, usually, so when they're doing a situation like that too, what we look at from a lender standpoint is them double qualifying if they don't have that contingency. So on paper, they can afford those few payments for a couple months.
That makes sense. And there's so many benefits that I feel like are just not talked about in VA loans, and specifically for people that qualify for them don't know all the benefits. And so I think it's so valuable to just be able to kind of give that back. And one of the big things I'm trying to teach people is how to create generational wealth for their family. And I want to talk about investment opportunities with your VA loan. So I know it's a whole lot easier if you're a single person rather than married, because Brittany, as soon as she was like, I'm not doing all this moving stuff. We're gonna move and we're done. And I'm like, but honey, look, I can find us good deals, you know?
Yeah.
And she's like, no. She's very happy where we're at, so I think we're sticking put for a little while. But when I was single, it sure made a lot of sense for me to buy something and to have people live with me, friends live with me, stuff like that, because it reduced my overhead on rent.
Yeah.
I love the idea of buying like a duplex or a triplex or something bigger,
Mm-hmm.
if you can, living in one of those, and then renting out the other ones as a strategy for creating wealth. Talk to me about how VAs could, or VA loans, veterans could qualify for that and what that looks like.
That is a great strategy to build wealth on the VA loan because you can get the 100% financing doing that as an option, which normally investment properties are 25%.
Down.
Yeah. There's even some DSCR programs too where you can do the 20% down and use all the qualifying rent as qualifying income for that loan.
Okay.
But the VA loan, 100% financing, you live in one of the units as your primary residence, rent out the other 3, use that as qualifying income, and can buy that property.
Come on, guys. That's a no-brainer.
Yeah.
If you have the opportunity to do this and you're not, you just are throwing money away. Like, just throw it away.
Yep.
Just throw it out the window. Because that is such a game-changer opportunity for somebody, because the rents that you're going to get from those 3 units, if it's a 4-plex, are going to cover the cost of that. And so, obviously, they got to be rentable,
Mm-hmm.
right? They can't be like slumlords, but we've talked about what it takes to get the appraisal through that process, so it has to be in living condition. But those deals are out there, and that is an incredible opportunity for wealth generation. And on top of that, it's not a forever strategy, right? You don't have to live there forever.
Mm-mm.
What is there any requirement for that, or?
Yes, so there is a rule where you have to live in that property for 12 months as your primary residence. But
1 year, wow.
there's a lot of veterans who PCS in less than that. So there's extenuating circumstances that they're obviously going to go along with.
Yep.
Because if you get orders, you get orders. And
Right. So,
shipping out.
I mean, the caveats to that would be, like, you can't leave in 12 months. So 1 year, meaning that deal with it for a year and then move out and rent that 4th unit. And now you've got a cash flowing property that, go to another state, go to another country, whatever you're doing, you're cash flowing, and that's another asset for you to be able to, again, build generational wealth. So massive win. That's huge. What are we missing? Like, what other things outside the box could they do for that? Did anything else come to top of mind?
I mean, it can be any type of property. It doesn't have to just be a 4-plex too. Okay. It can be single family, duplex, triplex, quadplex. Like, it's up to 4 units.
Okay.
So they don't have to start out as large, but they can slowly build themselves up too.
Okay.
There's no like area requirement either. So say they don't PCS, but they just want to upgrade their home.
Yeah.
They can do that as well and still get a VA loan if they have the entitlement.
After 12 months.
Mhm.
Yeah. Can't do that before
Yeah.
12 months. Now, if it's extenuating circumstances, then you can do it. But
Yes, like
12 months.
like you add a family member, you need more space. Like those are extenuating circumstances that would qualify.
So there's loopholes in that.
Yes.
Okay. All right. Well, let's buy a 4-plex for you. What's a crazy VA story? Stories resonate with a lot of people. You have one of those?
I mean, I have some good ones that not necessarily crazy, but
Good ones are good.
yeah. I've had some buyers, like first-time home buyers, that will still qualify for local assistance programs on top of the VA loan.
Okay.
So I've gotten recently a VA buyer. He got his closing costs paid for by the seller. I got him down payment assistance as well. So they got all of their earnest money back at the closing table. So they got into a house for completely free.
That's amazing.
Yeah.
With instant equity, because they got 3.5% or whatever it was that the down payment was.
Mm-hmm. And then they got it was like a 5.75% interest rate, because that specific down payment assistance program sets the interest rate, so it was extremely low, like lower than the market.
That's insane.
But it's to encourage buyers to get into the market, and you can stack.
Boom. There you go. Another golden nugget. If you are a first-time home buyer, is it only for first-time home buyers? Nope. So are we talking OFA?
Oklahoma County.
Oklahoma County.
Mm-hmm.
Okay, that's subprime too. That's incredible. Okay, so we talked about Cleveland County. We talked about the Oklahoma County grants a few weeks ago. This is like a bonus nugget for VA buyers. So you can qualify for a subprime rate. Rates are right now high 6s, low 7s.
Mm-hmm.
Well, this one's at 5.84.
Yes.
5.84. You get down payment assistance. It is a silent second. Is that correct?
So on that actual program, it's a grant. So
that one's a grant too.
Mm-hmm.
So holy cow. So 5 years for living there?
Mm-mm.
What's the requirement on it?
None. On Oklahoma County.
Guys, it's like getting better and better.
Mm-hmm.
If I had a donut right now, it tastes so sweet. And so anyway, VA buyers can get 100%.
Or actually, that one might have a time limit. Let me double check that, but I'm
okay,
pretty sure there's not.
I'm sure extenuating circumstances are
yeah.
valid for that too. So my thought process here is if you have VA eligibility, 100% loan, down payment assistance, so that's instant equity right there.
Mm-hmm.
And if I can negotiate your closing costs, you're literally in a house for nothing. Literally nothing. So all we have to do is verify that you're comfortable with the payment, get the insurance quotes, which we obviously have people for that,
mm-hmm.
That can get you into the right area of what you're wanting to pay. So this has to resonate with somebody. Share this with your VA people because this is massive. I mean, I've been preaching like generational wealth for people forever. This is a no-brainer of why you would not do that, especially if we can get you instant equity like that. That's huge.
So they have VA entitlement, both veterans. So if they're married spouses, you don't have to use both of their entitlements on the VA loan. You can use one or the other, or they can split it. But
that
strategically,
opens up even more. Yeah.
Yes, they wouldn't want to split it because you can use one or the other. Save money on the funding fee because if you are a first-time use veteran, it's only 2.15%. So you could buy a VA loan, say in Oklahoma, UPCS to Virginia. You can use your spouse's VA loan there at the 2.15%.
Nice. And if you have any disability over 10%,
mm-hmm.
then that's waived.
Yep, completely.
Free houses, people. The more you know. That's awesome. That's another really good nugget. I mean, so we've given you a lot of call to actions to get off of the couch and into home ownership, or even to consider a new way to use your VA benefits for generational wealth and investment opportunities. But one thing that I want to do is I specifically want to find a way to give back to the veteran community other than just through real estate. So I challenge you, if you work with myself and Bree, I'm going to donate $250 of my commission check to whatever veteran-focused charity you want. Bree, do you want to get on this?
Yeah, I'll match.
Sweet. So $500 to your favorite veteran-based charity at the end of closing, just for saying thank you for your service and thank you for being awesome. So we appreciate you so much. I hope this provided a ton of value to you. It sure gave me learning lessons, so I appreciate that very much. And great lender right here, Bree with Movement Mortgage. If there's anybody that you need questions about VA or really any loan, she's a great option.
Advice is always free. So that's been on my heart too. So we have a lot of like community outreach opportunities within Movement.
Okay.
So not only do they pay for me volunteering hours places, and then we'll match any donation I make. They also do a Grace Works. They do it up to $25,000 a year. So if I'm paying $25,000, they're matching it to wherever I donate for that amount.
That's huge. So the $250 that I'm doing and the $250 that you're doing,
they'll match.
Movement would do another $250. So it wasn't $250; it was $750. That's incredible.
Yep.
$750 your charity of choice, veteran-based charity of choice.
But then they also do. They'll do Grace Works too.
Okay.
Which is it's like our employee, essentially like a lottery. So we'll put in our charities that are like on our heart locally to us.
Yeah.
I put in MPS like Bridges Project for that because every quarter they will give $10,000 checks to 50 charities across the nation since Movement's a national company.
That's awesome.
And then they get a $10,000 check and they do it every quarter.
Question, just because you said Movement's a national company, are you licensed to service anywhere in the nation?
I can be. I'm currently licensed in Oklahoma and Arkansas.
In Arkansas.
Hmm.
Okay.
It took me like 2 days to get licensed in Arkansas.
So if you're moving somewhere, I've got a realtor for you, and she could probably lend it. So you've got people that you can trust no matter where you're going. Whether that's Oklahoma, you can use us. If it's not Oklahoma, let us know, and we'll find you somebody that will take care of you, and you know that they're going to take care of you because we vetted them. So that's important, guys. There's so much free money out there. There's so much opportunity, and there's a lot of people that do want to give back, and we're two of them, and her company is another one. And honestly, I could probably talk to my broker, and she's going to kill me for this, but she'd probably do something there too. So there's a lot of opportunity for us to be able to boost and allow veterans home ownership and the opportunity to build wealth through home ownership. So we'd love for you to take advantage of all of these things or any of these things that we're offering, whether it's through us or we've provided you enough value just to add some benefit. I hope that helps.